Two.
Now,
Yep.
welcome everyone to another episode of Wine Wednesday. It is June 12th, the year of our Lord 2024. Happy to be streaming on kind of an uneventful week, but get on down, grab your favorite beverage, whether it's alcoholic or non-alcoholic, sit down and let's kind of go over the week, talk about, kind of what we're going through, what's been good, what's been bad, have a couple glasses of wine, pour our hearts out, and get it all in here on this fine Wednesday evening. How's everyone doing?
Solid 7.4.
Is that what you would give me?
That's what I'd give you. Yeah, it's a pretty boring week. Feel like the best is behind us. Like statistically, I just feel like it is. And then, with GameStop kind of fading right now, just feel like the momentum's probably not going to be all that great going into the rest of the week. And I butchered one of the best plays of the week. So I don't know. I love and I hate summer trading. When you're coming off the back of a good like 20 to 1 hour type of trade, you feel really good about it and you're like, "Oh, I can sit back and do nothing for the next 2 weeks." But until you have that trade, you're kind of like a little antsy still.
Yeah, so the news on the block is that there is unusual call option happening in GME in the after hours. It looks like Roaring Kitty is selling his calls, but it's really just an
Can't do
assumption
that in the
based on who
after
we think
hours, can
owns
you?
them. Huh?
You can't do that in after hours.
Yeah, I guess you can.
There's no way.
Options definitely don't trade in the option. Maybe it's market hours that they were showing it. I didn't really look into the tweets. It's not really something that I personally care about, but that is going to, if it's true, it is going to kind of take out the air of the market that is here right now and probably really nail the coffin in for summer trading, I would imagine. Uh, yeah, I mean, the past 2 days, there hasn't really been much action in small cap. The one trade I think probably worth talking about is KITT. Just a little bit of a multi-day breakout that most people could recognize and be a part of. It was like the Roaring Kitty ticker, which is just a ridiculous catalyst, but it brought in some volume, had a nice breakout, and it seems like ever since that trade, it's which was Tuesday morning was the gap up, so it's been a full 2 trading days, and there really hasn't been much set up in small cap at least. And the challenge has been that like the pat on the back is have if I come to market open, one of the great things about like really having defined setups, defined criteria is like when you come to market open, you know immediately if you're breaking a rule. You know immediately if you're going outside your criteria. You know immediately if you're trading something that you shouldn't be trading. And one of the wins is being able to tell yourself no. Is to say, hey, like this is not my pattern. I understand that I'm bored. I'm sitting at the market. I'm watching things move. Maybe the stock bounces. Maybe the stock pulls back. Whatever your bias is, long or short. But at the end of the day that you're not supposed to be taking that trade. And it's so important to identify those moments and not take that trade and be able to say, hey, like I'm a disciplined trader. I don't need to trade today. I don't need the extra loss or win that is probably not going to move the needle in my account. And at the end of the day, it's unnecessary loss. And if we can avoid those trades and keep waiting for ideal ones, then summer trading gets easier. So pat on the back for anyone that like has some kind of system and their system hasn't been here for maybe this week. And you stay disciplined to not taking that unnecessary trade just to get the rush.
Yes, sir. I was trying to figure out how to get into our Twitter right now to post it, but I agree with everything you said. But what I didn't hear you say was what you were drinking tonight.
Yeah, we skipped that part, didn't we? I'm doing a Chateau Saint Michel. It's my girlfriend's favorite bottle of wine when we
Are you
go
sure
to
it's
the
not
market.
Saint Chateau Michel?
I definitely don't think it's that.
I mean, it's on the top line.
What did I say?
You put it in the middle. I don't know if that's the way it's supposed to be or not.
I said Chateau. You said Chateau.
Yeah, I said that part wrong, but let me just look. Nope, I just can't say that word. Chateau. What is it?
Chateau.
Chateau Saint Michel.
Oh.
You're right.
Yeah. Thank you.
That's what you're
What do
always.
you have?
What's your one that you run to Kroger and get when you aren't prepared for Wine Wednesday?
It's a $12 bottle of wine, and I don't hate it. So
No,
it
it's
makes me
not. It's
happy.
it's good. We've had it on Clover meetups. Um, I'll tell you what. I have no clue what I'm drinking. Tres Tigres Tristes. Obviously, the three T's from Portugal. I think I've drank this before. It's a beloved Portuguese tongue twister with savory notes of dried red currant and cedar. Our Vino Tinto radiates with the same complexity and charm as this linguistic limbo, obviously. And it's a tiger. Pretty cool tiger. You should get that like tattooed on you.
On me?
Yeah.
On my face? Do you always read the little description on these things? It's kind of nice.
I like to see what I'm supposed to be tasting to like learn because when you talk to like wine connoisseurs, they're always like, it's very oaky, it's very dry, it's very this, and I'm like want to know what they're saying. So if I do
So,
taste the complexity of the red currant and cedar, I'll let you know.
in one of my privileged wine tours and somewhere in Europe, one of the sommeliers came out with they had this box of scents, like liquid scents, and he would like as we were driving to the next vineyard, he would kind of pull out a scent and like make everyone in the van sniff it and tell him what the scent was. Is it pepper? Is it licorice? Is it, any of your basic scents that like would go into defining wine? Cedar, soil, salty, minerals, I don't know. And
Oatmeal.
pretty much no matter what you smelled, you got it wrong. There is no way to know. Like he gives you blackberry and you're like, vanilla? And he's like, no, it's blackberry. And you're like, oh, well, shit.
I don't get it. I think it's either good or bad. We don't need to talk through the flavors we taste. It's tasty or it's not tasty. You know? I can taste dessert wine from like a steak wine and like a chicken wine and a fish wine. But that's
Obviously,
about
that's
it.
way different.
Huh?
It's way different.
Yeah, Kyle really likes the dessert wine.
Does he? The
He
ports?
does. He does. All right, well, welcome in everybody. If you are not already, make sure you're subscribed to the channel. Make sure you hit that thumbs up button as well. We're here for Wine Wednesday. I believe this is the last one without Kyle. Kyle will be heading home at the end of this week, so we'll be really happy to welcome him back as well. Make sure you post any questions you have. Get the conversation going as we kind of get going here for the next hour or so. And we're just going to talk. What about whatever you bring up, whatever we want to discuss? It's kind of our free hour. It's like our free play, whether it be school or prison, that hour you get to yourselves. Right, Heidi?
Yeah.
For sure.
Yeah. Free play.
Parker asks, just curious because I'm uneducated on this, but if the Fed were to cut interest rates, doesn't that help the small cap market a lot?
I don't know if it helps it a lot. Look, if interest rates cut and money becomes more freely available, then yeah, you could see more demand in the markets. I think one of the things that really helped propel the 2020 and 2021 markets is just the fact that there was free money. So whether you were a business or a consumer, you could get a loan at 2% and try to beat 2% in the markets, and that's quite easy. When the loans are 8, 9, 10%, it's different. It's much more difficult to beat that loan. So relatively, it's very risky. But if we start loaning money that's like under the average return of the markets, then people might find it more expeditious to take a loan out and beat the market rate, right? So it just allows for more money to be in the economy. And whether that comes in a small cap or big cap or whatever, like it just allows for more money to be there, more liquidity, and that's what creates opportunity. So yeah, lower interest rates I just think are good for the markets, right? Because otherwise it's not necessarily good to loan cash like that. There's other vehicles to put it in.
Yeah, I'm also uneducated on the subject, but I think Kyle kind of hit it on the head earlier as well, just saying kind of what you were saying too. It's just like, which is why we've seen so much dilution in the past year or two, where it's just more affordable for companies to go ahead and raise through methods of dilution, offerings, ATMs, warrants, whatever it is, dilute that stock at the earliest convenience, then do a reverse split and then redo the whole process. I've never paid much attention to that over the 9 years I've been trading, so I can't draw any trends or correlations to what years were better because of which and what. But I try not to think about that stuff for the most part, and you're usually going to get the same answer from me, regardless of what the question is about real life stuff like that, because if it were to help in small caps, then I would just see it in the amount of opportunities I see. And if it were to hurt it, I would see it in the amount of opportunities I see. So knowing the answer to that doesn't necessarily help me, because it's not like we're going into any given week or month going, okay, interest rates are down or interest rates are up. This is the type of month I expect to have. It's, if there's good opportunities, I'm going to trade them, and I'm going to do my best to execute to the best of my ability. Cha feels.
Shotfield.
What's going on with the presidential election stuff? I feel like that's flown under the radar. Like, that's all we were talking about at the beginning of the year was like, what's that going to do for the market? When does that really kick up? When does that kick up into speed?
November.
No, that's when we vote.
I feel like it kicks up into speed in November, and then it gets wild into February.
Because you have like the changing of the hands.
Yeah.
Or
It's
maybe
like
not
the
the changing of the hands.
anticipation, and then the reaction, and then the actuality, and then the result.
So the worst thing for volatility would be if Biden won again, because then there would be no changing of the hands, and then that period would be slower.
I think it would be horrible. I think it would mean higher taxes, less money in the market, right? Like, taxes go higher, same thing, right? Interest rates stay high, taxes go high, less money in individuals' hands, less money to play in the markets, less risk appetite, less players. Bad news for day traders.
We need less presidential stuff, more Roaring Kitty.
More Roaring Kitty.
Imagine what Roaring Kitty could have done if he had just went full Zach Morris and like just picked like a new stock every month for the last year, you know?
I don't know. I feel like that was literally going full Zach Morris. I put $250 million on a stock.
But it was the same stock. Like,
you know what's cool though? You know what's cool about what he did? It's you only have one sequel, right? You only have one, like, I'm coming back, you know? And you can't be like he could have been like, yeah, I bought some GME, couple mil, and that would have probably like impressed a lot of people. But he was like, nah, like, if I'm gonna do this, I'm coming back huge. I'm putting on a number that's gonna shock the suits, you know? And he's like, I bought 250 million. That's crazy. What a guy.
It's crazy. It's also, I don't know, you just wonder, like, that's a lot since Friday. A lot of what I've been thinking about is like, we're either in part 2 of Dumb Money the movie, or this is a really sad ending to what it was. And when you ride off into the sunset, sometimes maybe it's better to just stay in the sunset, you know? And I don't know. It's just like, imagine if he did that when it was at 17, or maybe that's where all his money came from, right? It was the breakout from 17 to 80. And then that's when he put it on the line for publicity, and this means nothing. I don't know, but it'll be a bad taste in a lot of people's mouths if this is like the end of it. And who knows? We still got what? 10 days, 9 days? What? Yeah, 9 days.
It looks closer to the end than the beginning.
It feels really, I would be like the way this morning happened, and then kind of like how we're back at 25 right now. It just feels
really dead.
Yeah, like under 20 is like, if you see teens, that's like where this all started, and it's a sad day.
That's not a high or low.
Huh?
That wouldn't be a high or low.
No, it'd be looks very dead.
Yeah.
So we'll see. There was a lot of speculation today that he was the one selling those options right before the close or into the close. I feel like those were still in the money, weren't they? The chart I saw, which is absolutely insane. You would think he would have sold some of the 5 million shares that he owns in the after hours day when it's in the 60s, just to like, I don't know, lock some in. I don't know, but it's going to be an interesting situation. Like, does he ever go live again? Does he ever talk about it? Do we squeeze from here? Who knows?
You also need to understand that, like, when you exercise the calls and you end up with stock long from $20, you also need the capital to own that stock, and you have like 120,000 contracts, and each stock is 100 shares per contract. So, I mean, the math escapes me, but like, you're gonna need a lot of capital to own those shares at $20. Like, I don't. He doesn't have it unless you sell your current equity. You can't necessarily own all those calls with the money that he has. He doesn't have the capital to do it. So it doesn't make any sense. But it would make sense if it was at 70. Because then you could sell the equity and then continue to cover the calls and then sell the call and then exercise and sell.
Oh,
Anyways,
who knows? I'm interested to see. You flash forward a week from right now, and we'll be what 2 days away from those
I'm just
fully expiring.
I'm just happy that like stuff like this happens in our market, that we have like now that you guys get to see this as well. Like, Roaring Kitty is not new. It's just another promoter. He's just another person in the market. We've seen moves like this from tons of other types of people, whether it's Guy Gentile, whether it's Zach Morris, whoever the F it is, flavor of the month. As long as it brings volatility and brings sharp patterns, that's what is going to keep me and Dom having a living. And it's just some stories are better than others. Like Roger Hamilton, like, I'm not gonna go to my Thanksgiving dinner and tell everyone about Roger Hamilton and GSI or GIT, whatever it was. But I
GNS.
would GNS, but I would go to Thanksgiving dinner and tell them about GME, and they say, "Did you make money?" And I said, "Well, Fifi, that one was really good to me, but GME I hardly traded." That's kind of the truth. Uh, but yeah, I mean, this is like a good story to tell relative to like the other things that we see. But we see this all the time, and it's really just about knowing where you belong and finding that moment to make money while this is going on. Because most of it ends just like this, like Roaring Kitty, the 90% that flock into his trade, like that's usually the lesson curve, the bell curve. That's usually the cutoff.
Yeah, and a couple people. Someone says maybe the shareholder meeting tomorrow will pick up momentum. Someone else said Ryan Cohen beat Kitty this time. You would think their interests would be aligned, though. No,
What?
Someone said Ryan Cohen beat Kitty this time, but wouldn't they kind of be on the same goals to get the stock price as high as possible?
I mean, that's really one of those things where you have to wait till 2 days before, his options expire to see how it all goes down. Because yeah, on one hand, like Ryan Cohen has done very well for GME. He's made them a lot of money by taking
$4
advantage
billion
of
dollars.
liquidity. Yeah, I mean, but this is no different than Bed Bath and Beyond, by the way. This is literally what they did. When companies see there's an opportunistic amount of liquidity trading their stock, and they have the tools necessary to dilute their stock and create a financing from it at appreciated prices, they will, because a company's end goal for being listed in the market, in the capital markets, is to extrapolate capital. When stock price goes up, get reappraised, so to speak, and create a financing and arrive at a more fair value price. Um, Same thing as real estate, right? So when your stock gets artificially pumped to $64 from 17, yeah, it makes a lot of sense to do a financing and lock in some capital. And the fact that he was able to get 5 billion out of it, or 4 billion, is it's truly incredible, right? And I think it does have a lot of long-term capabilities. Like, I don't think Roaring Kitty's wrong that the video game space is interesting, that GameStop is a pioneer in the space. And if they pivot and find a revenue model that makes sense with the upcoming AI world that we live in, a virtual reality, like, yeah, maybe GME pivots and has this amazing business model years down the line with this 4 billion that they're able to generate. But it's not today. And that's like the hard part, where like you could go to 12 first before you see 80 again, right? Like, you don't know. And it's really quite the gamble to like say from here that this or that's going to happen.
Yeah, that's why when you said earlier, like it feels more like the end right now. And I don't mean the end forever because they have so much money. And so it's like it doesn't matter if for the next 2 years GameStop doesn't turn a profit. All that if at the end of the day this is just a battle between long-term shorts and long-term hodlers, and that the company has enough money to stay afloat. So it's like I think this is be something that we revisit every 4 to 6 months. And if it does fade off from here, I would say it's probably done for the summer. and then maybe it's something that we see again in the fall. But yeah, I'm kind of done predicting the stock because every time I thought it was done earlier. Like I remember you made the joke about putting $1,000 or 1,000 shares into it or something before the most recent run back to 60s, and I was like, it's not happening. And then that move happens, and then they do the same thing, rinse repeat of big red day offering earnings, whatever it was. And then now I'm kind of like, I could see it going to 100, I could see it going to 12, and I don't know what it is anymore, but neither would surprise me. So I think the best thing to do is sit back and let it play out. But once this timeline of the next week kind of goes by, I think there's going to be a lot of like how much in 2 months from now, if the price doesn't change much, does Roaring Kitty's tweets really mean, or his memes, or any live streams, And so we'll see. I don't know. I'd like for GameStop to be something that we're still talking about in 5 years. That'd be awesome. But
It's like the next Nvidia or the next 10 years.
that would be crazy. Like that's the big thing. Like, do they turn into a completely different company and do something else with
That's
all
what
this
I
money?
think they have to do. You can't
Just
keep
pivot.
You're gonna have to pivot, but that's the thing. Like with their money, they can pivot in so many different directions that there is like kind of you do see upside within the gaming sector. Like for instance, like video games, right? Like we're talking about trends. 20 years ago, you played video games and you were a loser. Today, you play video games and you're someone like Ninja and you get $30 million sponsorship deals from Nike, right? Like that wasn't happening 20 years ago. Video games did not demand that type of business or transactions or contracts like 30 years ago. So there's obviously some kind of upwards like understanding of where AI and all this stuff is going to take video games and competitions and stadiums and all this stuff, but it's not really my field of understanding. I don't own Nvidia, right? Like,
it's not my field either. But I also feel like, especially in the most recent, almost decade, like I can't remember the last. I don't play a lot of video games, but you can buy your video games right from on the main screen, right? You don't even have to own the physical copy anymore. So it's like, what role does GameStop even play in their only role right now?
Hardware.
Like just buying and selling the games? I mean, the devices?
Games, controllers, systems, and hardware.
What about Amazon?
Not software. Yeah.
I don't know. I think they're going to pivot, and that could be the next big thing, is them sitting back this summer, sitting on their $5 billion going, ooh, we made out really well. Thank you, Mr. Kitty. And let's figure out what we're going to do.
Let's call Mr. Kitty and ask him, maybe.
We can try calling him. I'll call him right now, see if he picks up. I'm just kidding. Daria says, would you put Roaring Kitty in the same category as Zach Morris? No way. I wouldn't. I think it's something that transcends all pumpies. That is, I mean, they made a movie about it. They made a movie about it. Like, huh?
Why? I honestly don't see why you wouldn't. Zach Morris has made, if not equal amount of money, more money than Roaring Kitty.
I feel like Roaring Kitty went into a room that already existed and just posted stuff that he believed in and talked about it for like a year. Never talked about a different stock or something else. And for the 4 years later, is still dumping now hundreds of millions into the same stock.
I mean, I guess what he's doing is epic, right? For lack of a better word. But I still think that Zach Morris was an incredible pumper. And I think this is a pump. Like, it's not like Roaring Kitty is coming out and saying
it's a pump, but it didn't start like a pump.
But it's not like he's coming out and saying, hey guys, GME just locked in $5 billion, and over the next 5 years they're going to redefine their company. They're going to break into these industries, and they're going to have future cash flows of X, Y, and Z. That's not what he's saying. He's saying in the next 3 weeks it better be higher, or else I'm broke. So it's different, right? And that's actually more like his first bet was different than his second bet. And his second bet, I think, is more towards the Zach Morris type of like, this thing's going to go fucking up if we all get behind it. And if you don't, you're all a bunch of you-know-whats, and you need to put your money where your mouth is, right? That was Zach Morris's like marketing lingo for so long. So like, that's kind of where Roaring Kitty is right now. Like, everyone hold the line so that I get super rich. Or if you don't, like, I go super broke, but at least you know that I got the nuts.
But I kind of feel like the way he's doing it this time is still different. Like he has never even said anything. He's only had one live stream, and the whole thing was him just watching it be halted down, going laughing about it.
But I'm just saying, like
Like,
Zach Morris bought like Zach. How much money did Zach Morris put in AMC, and then how much money did he make when it went to freaking 20 or whatever? Like, I think it's equal proportions.
I don't know. We also don't know what Rowan Kitty was doing the last 3 years.
Morris
That's the
and
secondary movie. I think the sequel,
Oh.
if you just tell us what you were doing the last 3 years.
Yeah, that'd be nice. Also, Zach Morris is someone that's easy to despise, whereas like Rowan Kitty, you want to root for.
He's a hero. Yeah.
Yeah.
I don't know. I think they're different. I think one of them just kind of fell into the role, and one person tried to be the role.
Okay. But I think once one person found out that he had the role, he's milking it.
Oh yeah. Well, what else do you have in your life if you're Roaring Kitty?
That's awesome.
Like, I mean, I think he's more worried about he probably has other ideas that have made him lots of money, and he's like, I can't talk about this idea on NVIDIA because no one's going to get interested about it. It's not GameStop, you know?
You think he's like Long Build-A-Bear?
What is that one? BB something? You haven't talked. You brought that up like 4 years ago. Is that BBW?
Yeah.
No, is it?
Yeah.
It is. Yeah, I feel like he feels trapped. You know, like Gibby from iCarly. Do you remember that?
No.
You watched iCarly. Come on.
It was a little bit after my time.
It wasn't after your time. You're older than me.
Right. So
by a year. Less than a year.
Like, by a year.
No. But like how he couldn't get another role in anything else because everyone thinks that of him, not the actor, but he is the actor. Or he is the character he's playing. And I feel like maybe Rowan Kitty's like that, and he's stuck in the role and he can't get out of it, so he's got to talk about GameStop, so he put $250 million into it.
It's not fucking nuts, man.
I'm excited to see how it plays out, regardless of what happens. But Uro says, how low will GME drop once this hype is over? It's a very literal question for something that we have no clue on.
Yeah.
No idea. All I know is they've exercised 150 million shares without ever going below $20, so... And I was buying the breakout at like $16 weeks ago. So they are the winners here.
Yeah, it's really hard to have like real predictions about where GME is going to go. It either is like, it could be like a liquidation event. It really could be. We don't know so many things about how he's going to exercise the calls, or if he sells the calls and doesn't ever exercise them. Like those are two different scenarios completely. But if he does exercise them and gets all those shares delivered to his account, which again, I don't think he has the capital to do in the first place, so it doesn't really feel like a real future. But if he does, then there's going to be a liquidation event similar to what you see in like the Chinese liquidation plays. Like this could get really ugly.
Well, I think once people actually see him click the sell button, and it's not for $40 million, like the first time when it was such a positive thing and it had gone on for months and months. Like, him selling for a break-even or a loss feels like they lost, you know? Like, the movement lost. And I kind of feel like it could get ugly, but I also feel like... I just don't know if a lot of people will take their losses because, like, they've been in it for so long or have been riding this wave for so long. Who knows? It's not... I'm definitely not... I'm not shorting it down here. That's all I know.
Yeah, yeah. If I'm short from the upper part of the chart. I really can't make judgments from 26. Just feels like neutral zone. And like, does it go lower? Does it hold? I don't know. I really don't. And you don't have to know because you don't have to play it.
Do not have to know. Rui says, what?
Next question.
Yeah, would you buy GME, AMC, KOSS if Kitty comes out and exercise his options live on YouTube, or sit this one out?
Let me explain this to the people back home. If he exercises his options, so there's the other side of the trade, and you have to assume a couple things to really envision the squeeze, and that means there's like, maybe I might use the wrong words again. None of this is financial advice. We're amateurs, yada yada descriptions, but there's the other side of the trade where there's if he's buying the calls, someone's selling them to him. And so I think I can explain this correctly, but pretty much if he has to exercise those calls, again, 120,000 calls, 100 shares per call, it's a lot of shares. Someone has to give him those shares. Someone has to sell him those shares. Meaning that the people on the other side, the people on the other side of the trade have to buy the shares in order to sell him those shares. And depending on what stock price the stock is at, when they start buying those shares, again, it's 100 shares per $120,000 of 120,000 contracts. So 100 shares per contract. Like it's millions and millions and millions of shares. They have to start buying those on the open market if they haven't already bought them already. They could have already bought them and completely hedged themselves and be ready to give Roaring Kitty his shares. But that's also a risk as well, because if he never exercises his contracts and he just sells them, then you're just going to end up holding the bag as the other side of the trade as well. So it's hard to know whether they've really prepared for the world where Roaring Kitty is right. But in the world where the stock is at $40, $50 and he's exercising his calls and they have to deliver him millions of shares, they have to start buying millions of shares in the open market and then selling to Kitty at $20 a share. So, which is his strike price. So that kind of demand is kind of like what this person is asking, which is like, is that worthy of buying with the market maker, so to speak, to propel the stock up? It's not something that I would ever do, like, because it's a little too assumptive. I'm playing in someone else's cesspool of like opportunity. I really don't know enough information or data to really be able to micromanage that trade in case like stuff gets really wild all of a sudden. And it's not a pattern for me, but I think it's worthy of talking about the inner mechanics of why you're asking that question, which I think it's fine. Yeah, 12 million shares is kind of like the amount of capital he has that would equate. I think that's like 14,500 shares or something. 14,500 of his options is like 12 million shares, which is the $29 million he has in his account. So again, if he sells some equity, his 5 million shares, he can put more money in his account and exercise more shares. I mean, there's a lot of things that could go down. But I would not make a trade off of it. I mean, just me. It's not where I make money. I don't make money with that. But
So
I think it's going to be a cool option.
this stuff really confuses me because I am very much green on options, and the most I've ever done is trade like a 3K account and just make 2 to 3K bets. But I never thought about liquidity like that or what it does to the stock price. What would happen if he just went to the Cayman Islands right now and never touched his position and expires next Friday?
I think I don't understand necessarily what happens when it expires, but I think it just expires and you don't receive your shares. So whatever you paid, you bought the calls. Whatever you paid, that money goes to zero.
So yeah, so nothing would happen if he's selling for a loss,
Nothing
you
would
mean?
happen. You either sell the call before expiration or you exercise the call before expiration, which is delivery of shares. But I think if you let it expires worthless.
And so that there's no liquidity needed for that?
I don't think so. I don't know. I don't know for sure. I don't think so.
Okay. Yeah, I mean that's above my pay grade when it comes to option stuff, and
A little bit
generally
as
not.
well, but what's cool is we get to learn about it a little bit.
This has been a fun little learning experience with all this. You don't normally see people with $100 million positions and things.
Yeah.
I think Brendan's going to say something important. He says, if it's below the strike, maybe he's
All right,
still
Brendan.
typing.
Let's hear you out.
Fu Ranny says, I miss being in the room. We miss having you. Though today was quite slow.
The past 2 days have been quite slow, guys. It's good though. It's a good thing. Honestly, it's a good thing. Like I like it because May was like, I don't know, for 2 weeks in there, for a 2 week spree between FFIE, GME, and AMC, and then whatever gappers we had, it was busy. Where it was like, whoa, I have to like trade really well and I can make a lot of money and this is a good opportunity. And now it feels like I can kind of push the brakes a little bit, enjoy a glass of wine, go out, take a walk throughout the day. Like I don't need to be here right now until the market tells me to come back. But we are having like a good break off of like some pretty heavy headwinds, I would say.
Yeah, it's just annoying for me that the last week or so of May was a struggle for me. So, like, I mean, I can't complain though. And I talked about this on Good Morning NASDAQ this morning, my webinar yesterday. we had opportunities this week. I nailed MLGO, and I sat there and watched KITT break out without me, and then go and gap 100%, and kind of equated it in my mind to all you deer hunters out there. I know Huddy's your bow hunter, right, Huddy?
No, I've never touched a bow, by the way.
So Huddy's a bow hunter. Used a recurve actually, but like
You-
it's late. Like you got 15, 20 minutes left in the night, and it's dark. Like you can barely see, and you have a deer walking across, and you're ready, and you're ready, and you're ready, but you can't quite tell if it's big enough that you want to shoot or not. And then by the time you find out that it is big enough that you want to shoot, it's gone, and you can't shoot it. Um, that's how it felt with KITT. It wasn't like I missed it. When I keep saying I missed Kit, it was like I stared at it all day and had orders in, pulled them, had orders in, pulled them, and it just came and went without me. And so that's frustrating because I know that this week could be significantly different. Like from where I put my first orders in, at 18 something cents, it would have been phenomenal. But now I think it's going to be a pretty slow end of the week.
Maybe. Just make my watch list right now.
Humble says if it's below the strike, doesn't he get the shares? Wait, if it's above the strike. But that's where the liquidity stuff comes into play, doesn't it?
But most people don't exercise their calls. Most people just sell their contract. So it's a very interesting scenario whether he exercises them or not, because that's not something normally you sell your calls and you make a lot of money. It takes a really weird fool to start exercising them and saying that the stock's gonna go higher.
I guess. Ruby says, did you guys hit DDC today? I don't know what type of hit you're talking about. I saw that it was up this morning. It halted a few times. Went from, I don't know if it was the pennies to $2 or if it was higher than $1 when it opened, but it wasn't on the gappers list right at the beginning
It
of the
was just
day.
a halt fest today. It was untradeable in my opinion. I personally don't love trading these stocks that just like halt, or I don't know. Like I saw it trading and didn't like the way it traded. It spiked really well in the first 2 hours. It faded really well for the next 4. Congrats if you caught the upside. Congrats if you caught the downside. But that's really not a chart pattern for me or action that I like to trade. I don't think Dom for either.
No, by the time I saw it, it was already too far gone, and it gapped 23% this morning, so nothing too crazy. Yeah, we had a couple today. What? DDC, LGVN. I saw someone talking about KAVL, Cavill. I put them on lists, but at this point when we're running low on gappers, we're running low on gappers that run. We're running low on runners. The watch list starts to take the hit from that, and you start to have less on watch. Like I'm going to make my watch list after this, and I don't really see much that is on there tomorrow. So either we get some gappers into the end of the week. Tomorrow's Thursday, and we get some runners, and something kicks off.
Come on, gappers.
Huh?
Come on, gappers. No, I like a couple charts. I do. There's a couple
There's an
situations
OTC.
That are brewing. Yeah, I like that OTC. Nice 3-day chart there. Not to name it. MDIA, kind of a 3-day run, and DRCT, kind of a 3-day run, but both kind of had the volume today and not throughout the run, but they're both up a decent amount from the lows. So maybe some pullbacks there, and then what was the other one?
LGVN.
Yeah, LGVN had a great day today. Former runner. This is a situation where we've seen it time and time again. If this kind of gaps up into the resistance, into that $4 area, I think there's a world where you have a day 2 gap and crap failure there. Just coming off of 80 cents to 4 would be quite the insane gap up. So maybe I don't necessitate 4, but maybe that's where my risk is based off of, and any kind of huge gap up I'm willing to look into. Those are kind of the 4 stocks I'm watching, and DFTF is the OTC that I'm not too excited about because it's a foreign ticker and it's tied to crypto, but it's got a nice little chart. So something for me to watch on a Friday. Like today I had 0. At least Friday I have like 4 key
Thursday.
situations. Thursday, that was was.
Yep.
Yeah, but other than that, like really only one trade this week so far. KITT and
T-Pet.
DPET didn't really trade.
You traded something else Monday, didn't you?
Yeah, there was something Monday. But I don't think I liked it.
HOVR was one that were DYS or DSY.
Yeah, DSY, I remember.
And Purity says BNAI is getting tight. Do you play breakdowns or would you prefer it to break out on high volume and wait for a good short entry? And I'm not sure which direction you're kind of asking about. I wouldn't play a breakdown from here if that's what you're asking on BNAI. The volume's already gone. I don't have a chart in front of me right now, but I know it's between like 5 and 4, and it's kind of at the lower end of its range already. It's probably a 50% move to the breakout level or more.
BNAI is interesting.
I wouldn't be shorting for a breakdown here. I want everything to run before I short it.
Is it an AI ticker?
I don't think so.
AI at
It's
the
like
end of it.
Bonanza or brand engagement. Oh, it is AI.
Leading
Yeah.
provider of conversational AI technology and human-like AI avatar. It's AI. What I will say is, this is not really my chart pattern. I know this chart pattern. I see more than anything like kind of this breakout area or this consolidation pattern in between, this 5 and 4 pretty much for the last 5 days, where I think like maybe if it comes out of the upside to this, it could break out of 10 and go crazy. I would never play this. This is not my type of breakout. I see the breakout, don't care. Like, and that's what you have to get to in your trading, where it's like, that someone out there will make money on this type of setup. If it's not for you, fine, let it go. Let someone else have it, right? I'm sure J-Bones is someone that's watching this setup like a hawk, right? I could be wrong, but I just know other people's setups. It's not mine. I see it work all the time. But for me, on a chart like this, I would take 2 or 3 attempts, fail on each 2 or 3, and then it would work, and then I wouldn't be involved. And that would make me more mad than anything. So what I will say is like NVIDIA, right? Like if I had to have a gauge of the sector of AI, what is NVIDIA doing? And NVIDIA keeps pushing higher, which is really impressive, especially this last like week and a half. So when an AI ticker is consolidating sideways and forming some kind of pattern, like I want to be bullish. I want to be bullish for the community of people because I don't want it to go higher just as much. I won't be involved in it, but I can see a world where like I'm trading this thing at 15 for some stupid reason. Its all-time high is 19, right? I'm not gonna buy it. I don't know how to buy things like this. I'll lose on it if I do, but I hope it works. Like I keep coming back to it and seeing it's nice.
Yeah, I'm watching it for potential. It's not like I'm dying to trade it right now. It's super liquid right now, super spready, super thin. Yeah, it moves in a very. I mean, the best day it had was the breakout day over the 3s or 4s, and there was volume there. I don't know if there was a PR that day or not, but it was very clear that day it was interesting. So if there's a day in which it is gapping or has a PR and it's doing massive volume in the 4 to 5 to 6 area, that interests me a lot on this one.
Well, and that's what's interesting about BNAI too. I played again the multi-day breakout from 529 to 531. That is a breakout I will play. I did buy that breakout. And what was interesting about that breakout is it did start out rather illiquid. If you're looking at the day before, there was 2 million shares. So when it was like going over green red, there was like literally like I remember it was like 500,000 shares on the day, and like all of a sudden I saw the bid start to stack. And I didn't even FOMO in that moment. I was like, all right, I still need it to prove to me that it's going to break out. But it was illiquid when it started too that day. Is my only like point to add. Which again is like
it wasn't illiquid though. I think if you put like a 15 or 20 minute chart on, there was increased volume.
Okay.
I'm saying, I think
I was watching her. It looked
you're
really
already
illiquid,
watching, yeah, but
like I watched it perk off 350 or 250. It looked really like you had to trust those bids were going to stay, and they did. and they did.
Then it pulled back towards that area and held on big volume, though, didn't it?
Right, and I ended up buying at 360, which is way higher than where it started at 250, which is where I'm saying it was a liquid. Like by the time
Yeah.
2 hours had passed, I was like, okay, this thing has volume. It has interest. I'll test the
And
levels.
that is probably the best way to play this one for me. I talked about it a lot in my webinar yesterday, just going through trade plans. But yeah, I mean, I don't really. I know Huddy's a big data guy. I'll bet you it's almost borderline impossible or 50-50 or worse looking at breakout charts like this that are so far from the real high, that are trading such low volume, that have had so many days of consolidation, that are so far from the day that set its top. The odds probably don't favor it going any higher, but I think, I don't remember, the initial question was probably about breakdowns, but when you start to lose liquidity and lose that trend, like if we go any lower from today's area, it's probably not going to be that enticing or interesting in either direction. But I do remember 5 to 530 is that important area, and then that even is still 40% from the $8 area. So we'll see if it's one we're still talking about in a week or not.
Yeah, I mean, it is getting tight, and it's either going to break out or break down. I think that's the right kind of assumption, like as it kind of tightens up here. And I think it's interesting for a number of different reasons. Like, last breakout was really good, right sector, holding above the previous breakout level. So technically, maybe a giant higher low over a multi-day time frame. Again, just not something that I play because it's kind of out of my pattern sequence, but I do hope it breaks out of 5, brings in volume, and goes to 15. That'd be sick.
It would be very sick. I'd love to see something like that. Keep bringing in those questions. We still got another 10-15 minutes that we got here. We are also on the mission to get to 5K subscribers. So if you have not, and you check right now that you're not subscribed, make sure you're subscribed to the channel. We post videos every Monday, long form content. We got some great stuff on the horizon for you guys, as well as we are live every single day of the week that the market's open. Monday, Tuesday, Thursday, Friday. Wednesday this morning, you guys saw that we did some live trading. We talk about gappers, fundamentals, dilution, daily charts, all that fun stuff. And if you want access to all that, make sure that you are subscribed so you never miss it. It'll pop up right in that pre-market when you are bored, sitting at your computer, going through scanners. We will pop up and you can join the fun, ask some questions, and have a good start to your day. Impurity says, I think you both had valid points on BNAI. I do agree the more consolidation days, the less likely the move on this type of ticker. Yeah, I wouldn't necessarily paint it that black and white, but it's, to me, it's more of how far we are from the actual breakout. You can kind of have it as two ways. I think it's 530 or 550 off the top of my head is the breakout multi-day, and then the multi-week, which is like the real level that it's set like a week or two ago, is like 8 or 9. So we're so far from that area that, and we're doing so little volume, and there was so much volume from that day, that I do expect there to be a need for a high demand to overtake that supply.
A need for a high demand, he says.
A demand for demand. Go see if I missed any questions. J-Bone says, Dom, you are my savior. I love you so much.
Hey. J-Bones.
I don't know what prompted him to say that.
I don't know why he didn't include Huddy.
Wayne says you gotta like it. You guys are doing pretty good today in the likes, I'll be honest with you. And if any of you join us for Good Morning NASDAQ and don't hit the like, that's where we're struggling. That's where the team, the viewers, need to step up and hit the freaking like button. Start a conversation, Huddy. Go.
It was raining in Miami today.
Really? How's that?
Horrible. I didn't go to the gym because it looked depressing outside.
So you didn't go to an indoor gym?
Yeah. Then I drive to it.
So for you, as an experienced trader of 9 years, market feels like it's slowing down a bit. Today's Wednesday, tomorrow's Thursday. What are you spending your free time doing right now in terms of if you had to get better as a trader for you this far in? What
Oh
data are
my
you
god,
looking at? What stats are
it's
you
so
trying to dive
easy.
into?
It's so and literally it's what I've been doing. I go into the data. I on my free time, I create different daily charts. I have an overextended gap down chart I'm working on. I have a gap and crap chart I'm working on, and I have a multi-day breakout chart I'm working on. And I'm seeing the ones that I missed. Why did I miss them? You know, why does the data pick up on them, but my eye doesn't? You know, what am I missing in terms of like what is pure data, right? Um, I'm also looking over the previous trades from the month, and what I'm realizing is like I keep saying this, and I don't think people understand it, but do less. Dom, help me with this one. Do less with more. Do more with less. Do more with
Do
less.
more with less.
Yeah. Like, it's not my next trade that's going to make me more money. It's my current trade. It's, you know, if I have a gapping crap, if I have an overextended gap down, if I have a multi day breakout, do I have the money in the market? Am I following the plan? Am I executing the strategy that is in front of me to its best of its ability? Whether executing strategy means less money at the end of the day or more money, it doesn't matter. It's just because when I look at my results, I look at my trades, I look at my month, I look at the data, and I say, am I performing better or am I performing worse? And most times I'm performing worse than the paper because human emotions get involved. Um, so I know that if I execute my strategy perfectly, like May I had a $20,000 month. If I execute it perfectly, I have a $50,000 month. If I take out some trades, I have a $60,000 or $70,000 month, right? The unnecessary trades. It's like being good at golf. It's like first you got to learn how to like putt because you got to take a couple strokes off, and then it's like, can we get better at our drivers? So our ball just lands in the middle of the green, so we have an easy shot to the hole, right? It's like these
With
little
our
things. It's not
drivers.
like, huh?
Nothing go. Continue.
I hate drivers. Um, yeah, so most of my free time is spent just looking at my trade results and then the data results and saying how can I do better. And it's really not about me adding another. It's really, this is the best part you guys are going to hear. It's really not about me adding more size. The way for me to make more money is not to add more size or to be more risk reward fluid in the best situations. Of course, those things will help, but the way for me to make more money is just executing my strategy better. It's just doing what I plan to do this year better. And less unnecessary trades, more strategy trades, and more strategy trades like plan to completion. And until I'm doing that, I really don't need to add size because that will make me more money alone. It's so true.
I tend to agree. And there's actually a good question that just came in kind of around a lot of what you were just saying. You know, how do you see your trading changing over time? Do you think your trading time frame will change significantly, or do you envision yourself trading similar patterns on the same time frames? Um, the longer you do this, the more you realize how hard trading really is. I feel like you have your first big breakthrough, then you ride that momentum for a while, then you hit a drawdown or a period of struggle, then you change some patterns up, you add a few more in, then you hit another period of success, another period of drawdown, then you maybe go exponential. Things all really work out that you learned probably the first time around. You hit another drawdown, and then you just kind of get in the cycle of where you realize that you don't have the market figured out and there's no guaranteed way to do this thing, and the market's always changing and it goes through cycles. For me, you know, I think we get this question a lot. Usually it's like, will you ever start trading mid caps or large caps or options or just the SPY and do something different? Um, I think this game is so hard in small cap land that until I truly feel like maybe another 15 years down the line that I really got a good grasp on it. Like the way I feel like Nate has a grasp on it, where you just look at his watch list, you look at his Sunday scans, you look at the way he talks. We've met him in person a bunch, so or at our boot camps, which you can go to our virtual boot camp next week, June 22nd through 24th, which he'll be speaking at. But he's just got such an understanding, has been through so many different market cycles. And, you know, even though it feels like we've been trading for so long, 8-9 years, like we've still, I feel like, never seen a lot of what's out there. And every different wrinkle can, you know, really affect your P&L in so many different ways and affect your mindset in so many different ways. So For me, I agree with what Huddy was just kind of saying. It's just like continue to try to be the best consistent trader possible by like sticking to what I'm good at and knowing that, over the course of my entire career, I'm a very opportunistic trader, right? A very inconsistent, negatively inconsistent, positively opportunistic, where I tend to do really well when I'm on fire and the market lines up with me, and I tend to struggle when we're kind of sideways and the opportunities are few and far between, and it's just not like really obvious where I need to be. And I feel like that was kind of the last 2 weeks of May for me. But I don't really see myself doing anything differently for a bit. I'm not really looking to add many patterns in beside what Huddy's doing with the gap and crap stuff. I think that stuff's really interesting, especially when we sit here and do Good Morning NASDAQ every day. The more I look at gappers, the more I read their news, the more I look through their dilution, the more I understand the statistics behind them, the more I want to trade those. But from more of an algorithmic standpoint. But beside that, to me, I'd rather be much more Jack Kelloggy. And when there's an SOUN, when there is a GME, when there is a big trade, I want to make my money on that, and then I want to sit back and take the 1-to-1, 2-to-1, 3-to-1 type of R trades. In the meantime, continue to grow slowly, and then boom, big trade, boom, big trade. Because that's the way I've done it my whole career, even if I don't like it. But I do think even with that style, I should be able to be green most months of every year. If you have a different answer, Jim Bob, I know you've kind of had a big transition from who you were to who you are trying to be now. So you've already started to change your trading.
I love this question. I really didn't adhere to the whole adapt or perish type of linguistic that I used to hear as a beginner. But now I really do. I really do think you have to adapt and perish. And again, I've been doing this for 9 years, so which is crazy to freaking say, honestly. And my trading has changed significantly over time. I mentioned this in our last boot camp, like when I was doing my presentation. 2017, 2018, I was predominantly, 2019, predominantly an overextended gap down trader. First red day guy. That's all I traded. That's where I made my 100K per year.
I miss that guy.
I miss that guy too. He was ballsy. And then 2020 and 2021 came around. My first red days were turned into breakouts. Like it was horrible. And there was like overnight interest that was like kind of off the charts. And so my pattern broke. That's what I called Dom. And I said, Dom, my first red days aren't working anymore. They're turning into breakouts. How do we buy them early? And then 2020 and 2021, I was predominantly a long bias trader. I was buying breakouts like no other, our first green days, because the market was they're really good for those types of things where you could buy a breakout, it would consolidate higher, you could add some size, pyramid in, and then take it to Valhalla, and it was sick. And then 2021 changed, and all of a sudden, a lot of these breakouts turned into offerings. A lot of these breakouts were liquid. A lot of these breakouts didn't necessarily take me to Valhalla. So I had to stop doing them because I was experiencing losses. And at the same time, first red days were never really, or overextended gap downs never really got back to where they once were. So that's the thing, like patterns do change. They morph. And it's not that first red days don't work. It's just that the specific overextended gap down started to defy its long-standing statistics of like holding under red green, like is like one of the bigger ones. The pattern morphed, but it doesn't mean it doesn't work. It just means that you need to understand statistically from the data what is the better approach now. And that's where my trading has come, where it's like I've traded gap and crafts my whole career, but my approach now, and to your question, my time frame, what I choose to place my risk on has changed. I've looked into the data. I know where most stocks won't go. I know where most stocks will go. And I know in what time frame that they're going to do that in. And so I built strategies around that kind of core concept. And those are strategies that I've only been trading since December. And I've made 6 figures on the gap and crap strategy so far. Of course, that could all go away. I don't know what the next 4 months presents. I don't know what the next year presents. But it's been a really interesting leaf to uncover where, again, most my gap and craps, like my time frame for holding is all day. First red days, I've kind of, a lot of my trading has throughout my whole career, I've always been taught that tight risk, big reward is the best. This year, in order to be amazingly consistently profitable the way that I am right now, is having wide risk and just making sure that I'm in the play long enough to see it succeed instead of trying to find that sweet moment where you click the buy button, the stock immediately rockets from your entry. You have a penny of risk maybe, and it flies 30 cents. A lot of 2020 and 2021 was built upon capitalizing on that moment. And it's because that moment was really easy to predict and it became true because there was so many players wanting to be involved in that moment. Whereas now it's almost impossible to find that moment. And if you have tight risk, you're most likely going to get stopped out and the play is still going to end up where you thought it was going to end up, but you didn't have the right risk parameter. So this year has all been about changing my risk to wide risk, changing my patience level to either an all day hold or a next day type of scenario, 4 hours at least of patience, so to speak. And my focus is on winning and not maximizing risk reward. And that has led me to a lot of consistency. And again, that's different than prior years. That's just this year, right? And it's been working really well for me, and I'm going to keep doing that.
Yeah, I'd like to agree with you and disagree with you because you said something. I don't know if you said it last week or it was during a webinar, or if you said it in the room, but you kind of said like a lot of the way you think now is like, do I want to have the same plan as 90% of everyone, 90% of the traders out there, right? If 90%
Right.
lose, I don't want to have the same plan as everyone because then I'm going to get stopped out the same amount as they are. And that kind of hit, it was like a little golden nugget for me because, I agree with you because I do believe that's important to like, wide risk, making sure you're in the play. But I also think what 90% of people don't do is have very specific criteria for what they're looking for and when they enter and why they enter. And you can still maximize risk reward, I feel like, on very specific plays. Like there was opportunities on KITT, even GME last week or AMC to make a ton of money and great risk reward because that was the time to do so. And you could be there before the 90% was there. And you could risk the levels you want to risk and achieve the risk reward you want to achieve. And like you were saying, like back in 2020 and 2021, where you just buy and you're immediately up 20%. And that doesn't happen every day. But if you restrict yourself to sticking to very specific criteria and waiting for those opportunities, I do think you can get away with a lot better risk reward and make a lot more money than you're risking per trade. So I agree with what you're saying in the premise. And I love that because that's kind of how I feel too. Is like, how can I lose once if I'm wrong, but be there if I'm right? And then waltz in the middle, trying to achieve the best risk reward possible. And you're trying to look at stats to achieve that. I look at a bunch of previous examples. I listen to you for stats. But it's also, I think, comes down to when you're watching what you're watching. And if you're being there when the 90% is or isn't there. And I think so many people just trade so often and trade so many different setups that it's really hard to tell if their plans are the same as the 90% or part of the 10%. But it's really inspiring and really nice to hear, Mr. Hudson.
And it's like, I just want to cap it off there. It's like, I really want to differ. Like, that is the golden nugget you picked up on, right? I don't want to have the same plan as 90% of people. And it's so obvious to know the 90% of plan is because what we're all taught is the same. No one is really taught data. People are taught do X, Y, and Z, and it will potentially, maybe, hopefully work. And so, for instance, everyone's taught that price action is king. I don't believe that. I think price action is built to literally make you think. Maybe some people understand truly what price action is. There are a few other, or tape reading is another one of those things. But most of the time, I think it's built to make you think things that are not necessarily there. But it's making everyone think the same thing. For instance, you have a stock that goes on a run, crashes hard, and makes a lower high. Every single person is thinking parabolic spike, hard crack, lower high, short the lower high, risk high of day, capitalize on the downside. That is not the plan I want if that's what 90% of people have. I want to say, okay, stock parabolic, stock spikes like X, Y, and Z percent. what are the odds it spikes another 20, 30, 40% from here? What is high a day relative to my 20, 30, 40%? What is my perfectly curated craft beer of preference, right? Where it's literally no one is thinking what I'm thinking. I agree. The price action is conforming to maybe some topping action, but does that really mean it topped out? No, it doesn't. It's a guess. And if everyone's guessing off the same exact moment in the chart, then everyone's going to take the exact same loss. So how can I pretty much, I don't mind the entry. I don't mind listening to the price action to some extent, but how do I morph my risk in a way to say, okay, high of day is likely to break, but is it likely to spike another 20%, 40%, 100% from this entry? Like, is it? Likely. And then can I put my risk somewhere where no one else has their risk? A risk that I've defined because maybe I like the risk reward. Maybe I like the odds of it not getting there. Maybe I like the odds of it fading. I'm not playing like, oh, it's cracked hard and I think it's got another 20 cents of downside. Maybe I think this daily structure has a high odds of failing. And if I'm positioning myself where it makes the most amount of sense and using a risk level that no one else is using, of course I'll stop out. Then I think I put myself in a better odds situation to be there for the fade, right? And that's the key, right? I just don't want to do what 90% of people are doing, which 90% of people don't care about the data. 90% of people don't care about the share structure. 90% of people don't care about the catalyst.
And that's what I
So
think
yeah,
it's important though too, like to continue to zoom out and zoom in, right? Because that same hard crack lower high on day one, right, is so much different than a hard crack lower high on Fifi when it's up 3,000% on day four, right? And you would treat
yeah,
that differently than you would on day one. And so everything is just diving deeper and deeper and deeper to see, because I think there are moments when you can trade like the 90% do, but because most of the 90% have made so many mistakes along the way and have donated so much money that they're not going to trade the same way when it's finally time and when the odds and statistics favor it, that is the time where you can actually get good risk reward with a high win rate and take advantage of the patterns.
yeah. And FFIE is like one of the better examples of that where not only am I using my data to framework my whole back end trade, but I'm literally adding every single day from 520 until 529. I'm literally shorting it every single morning because every single morning fits a different pattern. And literally, if you guys come to our boot camp, June 21st, 22nd, something like
22nd
that,
through the 24th.
I have probably an hour presentation. It probably will go under 2 hours. If you guys have been to my boot camps or our boot camps, you guys know that I talk a lot and I get really passionate about what I talk about. So I'm going to do a whole dissertation on FFIE from start to finish, 514 all the way through 529, different patterns, different reasons why I was going in, different data attributed to those reasons. You'll get the whole life cycle framework type of juxtaposition of FFIE. It's going to be great. And again, FFIE is one of those scenarios where I agree with Dom, where it's like, not only do you have patterns, but you also have situations to amplify the risk reward. To say, hey, maybe I'm shorting a bounce short, but then the next day it's an overextending gap down, and then maybe there's a breakdown coming. And this is exactly how Kyle Williams made I don't know, probably $160,000 on the backside. He maximized the risk reward once you were able to. So I'm excited to teach about all that because I think it was a really good backside.
Yeah, I'm excited to hear about it too, but I think that's why it's so important to know like which plays that are worth maximizing risk reward on and which ones aren't, and what is the level of criteria that you need to justify maximizing risk reward or not. Because there are many plays that I take that the goal isn't to maximize risk reward. I know for Huddy, there's a lot of plays where it's about win rate. It's about being there, losing once if I'm wrong, being there if I'm right, and then knowing what to expect if I am right. And I think too many people trade with the same one size fits all pattern across everything: long, short, parabolics, first green days, first red days, day one gappers. And that's just not how the market is. You have to find moments that make the most sense based off statistics and price action, support resistance, feel, all that good stuff, to come across with a strategy that is consistent over time to make, either enough risk reward to make profit with a bad win rate, or a good enough win rate to overcome a bad risk reward. And that's the fun thing about this challenge that is day trading, is figuring out that equation and when you need to do what. But all right, that is an hour and 15. So we're going to wrap it up here. We'll be live tomorrow morning, 8:45 a.m. Eastern Standard Swizzle, for another episode of Good Morning NASDAQ. We want to thank you guys for joining. We're sorry about missing the last 2 weeks. We've been all over the place. Kyle will be back Friday, I believe, so we're looking forward to having him back on the streams next week. Like Huddy mentioned, like I mentioned, June 22nd through the 24th, we have our first virtual boot camp. It is not like an all-day webinar. It's not just a little thing. It is the exact same quality, the exact same structure that you guys expect and see in our in-person boot camps, where we are doing live 45-minute to 2-hour-long presentations. We have guest speakers like Nate Michaud, Tim Gertani, Jack Kellogg, Randy Walker, Jay Bones, as well as roundtables, Q&As, and a live trading session on Monday as well. So if you want access to that without the hassle of the travel, the hassle of the plane tickets, whatever it is, the hotel rooms, food, all that good stuff, be sure to check it out. You will also have a recording to it once the boot camp is over, so you have access to it for all of time over on clovertrading.io. If you want access to that, head on over there and get set up. You have until the 22nd to do that. But for everyone else, for everyone in total, for Huddy, for me, I'm gonna go make my watch list right now. But we will see you guys tomorrow in about 12 hours and 14. No, it's 12 hours. We'll see you at 8:45 a.m. tomorrow. Math's difficult. I have it in my head 24 minutes.
24.
All right. We'll see you guys tomorrow. And thank you for being here. And have a wonderful night.
Stay classy, San Diego.
Stay classy.